What's going on, beautiful people? It's Joe, aka the Nomad Investor, where dividends freedom anywhere is the goal. And today we are back with another portfolio update as the markets destroy my portfolio. Things have not been going well, and I'm actually down significantly at the moment. I think it could possibly be getting worse. So we're going to cover that in the video today. But without further ado, let's dive right in. So we have officially reached 1,000 subscribers. I am truly thankful to each and every one of you who have done that. I want to keep seeing this go. So if you are new here in any capacity, or you have been watching the videos but you just haven't subscribed yet, if you could smash that subscribe button, that would mean the world to me. It would help keep me motivated to continue making these videos. But again, thank you so much to everybody. Most importantly, everybody, please smash that like button. It helps with the YouTube algorithm and make sure that a lot more other people get to see my channel. That being said, we are at 36 videos on the channel as of filming this video. I'm filming the 37th video right now, and this would be the 35th portfolio update. As always, the videos on this channel are for informational, entertainment, and educational purposes only. I am not a financial professional or advisor, and nothing here should be taken as financial, investment, or tax advice. Investing always carries risk, and those seeking financial advice should seek out a registered professional always. Now, as usual, I'm diving into my game plan and goal for growing my small portfolio from $0 to $1,000 plus per month in dividend income. Now, I have two sources of income. One is remote work income, pretty stable, pretty consistent, and the other is business income, which fluctuates up and down depending on the seasonality of things. And basically, I have committed to contributing anywhere from $300 all the way up to $1,000 plus per month into my Robinhood taxable brokerage. I'm treating this brokerage like a business with the aim of reaching 30% plus high yield. And the way that I am achieving this is through investing into high yield income ETFs primarily, such as, but not limited to, WPAY, HOW, QDTE, XDTE, XPay, blocks, and more. And I have committed to only having a max of 5 positions currently, where I'm going to be alternating between anchors and satellite ETFs. This is following the core investing strategy, the core satellite investing strategy. You guys can do your own research and learn a bit more about that, or you can hop over to Eugene Vasquez's channel. He actually has a great video that breaks it down. So I'm going to be reinvesting the weekly and monthly dividends that I receive depending on the funds that I'm in at the time, and I'm going to be implementing a manual drip process. So you heard it right. I'm basically going to be stacking the dividends to purchase whenever the market is down, versus kind of doing an automatic drip where it does usually like fractional shares or stuff like that. And it does high market orders. So I'm actually buying above current share prices or current bid and ask prices. But drip plus always compounding is the portfolio growth strategy. So I will be rinse and repeating this until my account hits $1,000 a month in dividend income. And once we achieve that, we shall see what's next and in store for this channel. Reminder again, this is just a disclaimer. None of this is financial advice. This is strictly for entertainment purposes only. I am not advising any of you to do anything that I am doing, nor should you copy me, because I'm just some random dude on the internet. Now, very briefly, I did want to cover my dividend income milestones while I grow my small portfolio. So for those of you who don't know, this is basically so I can celebrate small wins leading up to the bigger goal along the way. Last month, we were able to achieve the first 2 goals. This month, we are on track to achieve the 3rd goal so far. And if all goes well, I'll also be able to achieve the 4th goal, and who knows, maybe even the 5th goal. It all just depends on how the market continues to perform, what the distribution rates are going to be, and what have you. But you guys can pause this if you want to see all the milestones leading up to the big one. Now, I'm diving into the portfolio. As you can see live as of filming this video, pre-market, we are taking already a 4.7% dive. It's looking brutal. And to be honest, this is not for the faint of heart. I'm actually down quite a bit in this portfolio, and I think it's only going to get worse before it gets better, but that's just me. So if I go for the week, I am down 9.69%, so around $611.09. If I go for the month, let's see if this updates first, but I believe I'm around 10.67% down. 11.41% down. And then if we hop over to 3 months, let's let this load real quick. So 3 months is basically how long I've been running my portfolio. But yeah, I'm down 11.20%. So I am down $718.03 in the past 3 months. So I'm actually in the negative right now. I think my total cost basis is around $6,400 and something. I'll show you guys a little bit later, but let's dive a little bit deeper. As you can see, my buying power has decreased. And that's because I ended up buying more shares of KQQQ, which is actually in the positive right now. And then I also bought some more of PLTW as well, but we're sitting at $1,611.14 for buying power. My margin buffer is 42.34%, which is also equal to $2,407.03. My margin total is $7,529.67. My margin used is $5,918.53. Oh, real quick. If we click here, as you can see, the S&P 500 on Robinhood is down 1.66%, the NASDAQ is down 2.29%, and Bitcoin is down 1.98%. It's actually fallen below 98K. It's currently on discount for those who are Bitcoin buyers. But yeah, let's dive into each position. So taking a look at WPAY, it's currently at $47.33 a share. My market value is $5,680.31, and I am down $552.85, or 8.87%. My average cost per share is $51.94, and I still have 120 shares. I have not bought more into this position yet. I still think it will continue to dive a little bit more, but my portfolio diversity is 48.91%. with a maintenance ratio of 30%. Diving into HOW, we are at $56 a share currently. Our market value is $2,800 flat. I am down $401.64, or negative 12.54%. My average cost per share is $64.03. I have 50 shares, and my portfolio diversity is 24.11% with a 30% maintenance ratio. Next is NVDW. It's currently at $44.30 a share. My market value is $1,594.80. We are down negative $31.69, or negative 1.95%. My average cost per share is $45.18. We have 36 shares and a portfolio diversity of 13.73% with 30% maintenance ratio. Then we have KQQQ. It's at $28.90 a share. We are at $1,155.85. I am up 0.56 cents or 0.05%. My average cost per share is $28.88. I have 40 shares because I bought 20 more, which is also a portfolio diversity of 9.95%. So I would be looking to increase this at some point. And then I have a 25% maintenance ratio. So that looks phenomenal. And last but not least, we have Palantir, or PLTW, which is at $38.27. It's currently, my market value is $382.70. I am down $35.01, or negative 8.38%. My average cost per share is $41.77. I have 10 shares with a portfolio diversity of 3.30% and a maintenance ratio of 40%. So I'm playing it cautiously here. That's why my position is not so big, but I think I'm happy right now with the 10 shares. Now, I'll be completely transparent with you guys. I'll be real. I'm a little bit worried. We got a lot of good news in terms of the government reopening, but still the overall market sentiment hasn't recovered. And in fact, it's dumping even more, and there's a reason for that. So I'll cover that in today's video, but let's quickly dive into the dividend sheet. As I mentioned, this is how much money I have contributed annually to the portfolio, and this comes from every single time I make an entry of how much monthly contributions I do. And so in total, I have $6,485.16. So if we quickly took that number with my handy dandy calculator and we subtracted that 5,695.13, I'm just trying to cross-reference this, make sure it's accurate. So yeah, I'm down $790.03 on this portfolio. It kind of sucks right now. I always talk about capital preservation, but I did take some pretty big risk here. I didn't sell and take profits when I probably should have earlier on. This is way before we started experiencing this dip. And as a result, I ended up holding, and I was already down 12-13% because of HOW. And because I am really overly exposed in the WPAY 1.2x leverage positions, that is why I'm currently paying the price for this right now. Getting back into this, let's take a look at the positions that we have here. Actually, I need to update this. We have 10 shares now of PLTW, and it's at 41.77. So let's change this. So we did drop down our average cost per share. But yeah, if we look at market return, we are all in the red. There is no ifs, ands, or buts. I guess NVDW and KQQQ, as of yesterday's market close, it's in a positive, but we'll see today. So for total return, we are down 2.12% for HOW, negative 2.94% for WPAY, 3.98% up for NVDW, and 0.17% up for KQQQ, and down 4.62% for PLTW. And I believe PLTW, WPAY, and HOW, I'm down significantly more, but we'll see. All right, so I did get cut off, but HOW is negative 5.37%. Then we have negative 6.43% for WPAY, 0.331% positive for NVDW, 0.76% positive for KQQQ, and negative 2.82% for PLTW. And then just a fresh reminder here, these are how many dividends we've received for each of these positions so far for the entire month of November. And let me zoom in here for you guys. We are looking at $253.07 or $569.38 in dividends received so far. So hopping into X, I'm not going to show my account profile today because this ended up getting cut off. My mic had an issue and I'm kind of paranoid. This is actually not even recording my audio right now, but we'll find out. But yeah, the government reopening thoughts. This is from Richie B. He said, the House passed it, Trump signed it, the government is officially open again. Some people expect an immediate market pump, but remember, a lot of data was delayed during the shutdown. It'll take time for that information to surface, if it even does. Up until then, expect more chop as the market digests everything. We may see mostly sideways movement into next week before any real direction forms. My gut says the real run starts late next week or early week of Thanksgiving. Not financial advice, could be wrong, and I'll adjust as new data comes in. Happy Thursday, fam. So that's what he said yesterday. It looked pretty promising, to be honest, with what he's saying. And I do agree, like, we're not going to have an immediate market pump, unfortunately. Everybody wants that, but it is what it is. I also wanted to share this post from Amit is Investing. He said, ugly day once again. There isn't a massive headline, but here's what I think is causing it. Market wanted CPI today. White House said, laugh out loud, not going to happen. So lack of data is causing issues. Then also Verizon just announced 15,000 layoffs, 15% of their workforce. So markets seem to be thinking they cannot ignore labor market even without data. And then 3 different Fed presidents all came out over the past 48 hours and said they are more concerned about inflation. Powell a few weeks ago made it clear he cares more about the downside risk to the labor market. So the sudden shift is now making people think a December cut won't happen. Along with the potential fears on AI CapEx spend, that seems to be causing this drawdown. Having said that, earnings are strong, toots are buying heavily, margin continues to increase, data center build out isn't going anywhere even if some debt is involved. AMD just guided for 35% revenue growth next 5 years, and NVIDIA earnings are next week, Wednesday. So I just wanted to clarify, I did originally say in one of my videos, I think the last one, that NVIDIA earnings were on Wednesday of this week, but I was incorrect. I got it mixed up for some reason in my head. It's next Wednesday, okay? Rates eventually coming down and companies are still executing very well, so money likely will be allocated as we prepare for cuts. If the Supreme Court does reverse tariffs, could be bullish since markets never like tariffs and could lower inflation expectations. Not enough to get net bearish here, and the lack of a real headline causing this pain means it might just be a head fake. So I think this is pretty interesting to consider. There is a lot of positive data out there, but of course, there also is some negative data as well. So yeah, that's something to keep in mind, and I hope this is a little bit encouraging and making people not feel too scared. Next, we've got some good news. RexShares is coming out with their own fund of funds. I think this is in competition with WPAY, to be honest, but it's an actively managed fund, which differs from WPAY. WPAY is a passively managed one, and it's built from RexShares growth and income ETFs. So it's all designed to pay weekly distributions, and the initial holdings will be COII, MSII, NVII, and the rest that are listed here. And it says, who wants to buy this one? So I think this is something to be taking a close look at. If you guys aren't aware, with their growth and income universe ETFs, they have 1.25x exposure, if I remember correctly. And then they have like some kind of downside protection. I think they were doing like an options play to kind of protect and preserve the NAV. I think their strategy is overall very strategic and pretty cool. I would love it if Roundhill would kind of like implement something of this nature to their weekly pay ETFs. Unfortunately, I don't think that's going to be the case. And as a result, you're in for a wild run as we enter into more of a pullback and correction. And then for those who are invested in the blocks, don't be alarmed. In the last 3 days, the underlying positions fell. Well, we will rise when they do. So I'm obviously not in blocks right now, but if you are in blocks and you're suffering a lot, just keep this in mind. All of these positions are down in the negative, okay? And because blocks has those as its holdings, that is going to be a big reason why it's moving in the direction it is. And most importantly, in the words of Scarface in this meme, it says, relax, te crece. All right, and then another one from Beat the Bots. It says, Fed rate cut odds for December are dropping. Current odds are 51.6% chance of a cut to 3.5 to 3.75, and then 48 3.4% chance of holding at 3.75 to 4. This level of uncertainty puts steady pressure on equities and keeps risk assets on the defensive. Of course, we don't know what's going to happen in December, but we'll find out. And then last, but definitely not least, Roundhill is launching a new weekly ETF. For those of you who aren't aware, it's called TSYW, and it's the Roundhill Treasury Bond Weekly Pay ETF. It's an innovative fund designed to pay weekly income distributions while targeting amplified weekly returns linked to one of the market's most traditional asset classes, U.S. Treasury bonds. Now, something to keep in mind, this will not be added to WPAY's holdings, unfortunately, because this is not a stock. So this is a bond, and as a result, a Treasury bond. So this doesn't classify with whatever WPAY will have in its underlyings. So that's just something to be mindful of. But this is nonetheless a very interesting ETF that they're launching. However, I'm not sure if it would be worth getting into something like this for me personally, just because typically with these high yield income ETF funds, they have higher expense ratios. So I don't know if the distribution being paid out would make up the difference for this type of fund. Anyways, guys, I hope you enjoyed today's portfolio update. I know it wasn't super long, and unfortunately we did get cut. So some of my original thought process and insight that I wanted to share wasn't able to be directed, but I hope you enjoyed it nonetheless. If you haven't already, please make sure you smash that subscribe button as we continue on in documenting my journey. And most importantly, if you haven't already as well, smash that like button. It really does help with the YouTube algorithm. All that being said, if you have any questions, comments, concerns, suggestions, or feedback, comment them down below. I'd love to take a look at them, and I try my very best to read every single one of you guys' comments and even reply to them. So without further ado, until next time, guys, peace.